Alex, Aegon has just reported its first quarter. What's your reflection on those results?
Well, the first quarter we've seen very volatile financial markets. Equity markets have come down, have recovered, interest rates have come down, and that had clearly had an impact on our results. Our underlying earnings have been impacted, our net income has been impacted, as our capital position. On the other side, what we're seeing is that our customers more and more are coming to us. We've had actually very high sales this quarter. It's a reflection of the fact that what we're offering our customers is the financial security they're looking for.
Could you give us a little further dive in on those numbers?
In terms of underlying earnings, what we're seeing is that our fee business has been impacted by lower average balances. And as you can imagine, when the markets come down, we charge fees over lower balances, and that had an impact on our earnings. In terms of net income, we've seen an impact on our fair values. Our alternative investments haven't performed well, our hedge funds, which we're well aware of. And at the same time, we've seen that the volatility has led to some negative outcomes on our hedging of our large liabilities and guarantees in our portfolio.
Alex, what about the capital position?
Our capital position remains strong. With a Solvency II ratio of 155%, we're exactly in the middle of our range, 140 to 170%. Our capital position has been impacted in the first quarter by the announced share buyback, the 400 million, which we announced earlier, and the declared dividend that will be payable in June this year. In addition, we've seen that the volatile markets have had an impact on our capital position as a result of low interest rates, but also as a result of widening our spreads in the mortgages in our Dutch market. There was an offset, and the offset was coming from the disposal of 2/3 of our annuity book in the UK, which is in line with our strategy to move from spread to more fee business.
Indeed. So could you give us an update on the strategy?
Well, I'm pleased that we have been able to execute this first transaction, very much in line with our move in the UK to a fee business, which will allow us to concentrate very much our efforts on developing our successful platform and serving the increasing needs of millions of customers in the UK. We've also announced the acquisition of the defined contribution business of BlackRock, which will allow us to accelerate the execution of our strategy in the UK.
And beyond the UK markets, what else are we seeing?
Well, in the US, we're actively working on restructuring our organization towards one Aegon, and at the same time taking significant amount of cost out of our business. What we're also seeing is that the acquisition of Mercer, which is very much in line with our strategy, is starting to bear fruit. And that is reflected in the very strong deposits which we're seeing this first quarter. In the Netherlands, we announced this quarter also the disposal of the non-life commercial lines business. And that transaction allows us again here to focus on where we want to focus on, which is about serving the increasing needs of our customers.
And Alex, if we look further ahead, what do you see?
Well, we are in a volatile environment with a lot of uncertainty, and we expect this to continue. This also means that we have to get much closer to our customers. We have to make sure that they understand well what the implications are, and we need to help them find solutions that will mitigate this volatility, but also will address their growing needs. And that's really what we've been focusing on and will be focusing going forward.